Hi, Howard. Thank you very much for joining us today. In addition to being an expert on battery metals, you're also well versed in music, and you quite often make references to various rock and roll bands in your interviews and your research. And one of the greatest bands of all time, the Rolling Stones, just came out with a new album after 18 years. And I'm curious, what are your thoughts on this new album?
I've been listening to it while walking my dog pretty much every day for the past since it came out. I think October 18th or 20th. It was on, it was on my calendar because I knew it was coming out. But they had released the single "Angry Lithium" ahead of time, and at the time that they released that single, I knew I was going to use that as a title for one of my lithium bulls. So our most recent newsletter is entitled "Angry Lithium," the Rolling Stonks, to reflect the bear market that we're in, for lithium. But I would highly recommend soothing the pain that lithium investors may feel in their portfolio by listening to that entire album, and the highlight of which, in my opinion, is the one that Stevie Wonder and Lady Gaga are on, and that's the Sweet Sounds of Heaven. So I compared that to, when will Lithium Nirvana, return, and we'll all be singing the sweet sounds of heaven. I don't know. I can't predict that. I don't know, but it will come. I'm confident it will come.
Well, I hope you're right, Howard. So let's move on and discuss battery metals. 2023 has been an interesting year for battery metals and lithium specifically. After being up 140% in 2022, spot lithium is down anywhere from 50 to 60% this year. I kind of lost count on where it is, but the spot market has been very volatile. And I want to start right here and get your views on what's been happening within the spot lithium market and why it's been so volatile.
It's a tough question that we are grappling with, and I'll caveat this by saying I listened to all the quarterly calls from the lithium producers, and what's clear from all of them is that no one really wants to predict the short term, right? And none of them predicted this downturn. So if the smartest actors in the sector who are analyzing the market, who are in it day to day, can't predict what's going to happen in the short term, or even the let's say even next year. Who am I to give the right answer? But I'll try from what I know. And I'm sitting here in New York. My partner sits, Rodney Hooper is in Mauritius. We are reading as much as we can, but we don't have people sitting in China, and China is where all the information it dominates. So we Rodney called a bottom in around April, and there was a bounce into kind of June, and then it fell right back down, and now it's continued to go down. So it's unclear why, but we just think that there's been a destocking, right? There's been a lot of inventory last year. So there are supply reasons, and I guess there are demand reasons. So the demand reasons seem to be coming into play more now. You're seeing a lot of headlines about slowing EV from GM, and Ford, and Elon Musk was pretty dour on the quarterly call a couple of weeks ago, and high interest rates and wars and things like that. So there are, potentially some demand drivers impacting it now, but I think the supply reasons, there was a lot of buildup. There's a lot of buying last year, or maybe overbuying, and a lot of lithium is sitting inside cathode and inside cells, right? So there's inventory of lithium there, which meant that you didn't need to buy as much lithium, this year. So I think that's one component of it, but eventually that will be consumed, in battery, as cars are sold and other products are sold. The other avenue is that the very high prices incentivize all sorts of lithium supply that is not otherwise economic. The high end of the cost curve was profitable, so lepidolite in China, which is a very dirty and expensive way to make lithium chemicals, nevertheless, became profitable, and plenty of companies in China have started to make and process that. And that's why we don't have a great line of sight. I don't know how much supply of like the public companies, supply demand of hard rock and brine, we can get a handle on, but like how much lepidolite is available. Groups like Goldman Sachs and others have been warning about it, and they've been right, that there's been a fair bit of supply, coming from lepidolite. And also another sort of black hole is Africa, and a lot of private companies that the Chinese are involved with, in Zimbabwe, Nigeria. We're learning now about a lot of this supply, and a lot of it is just direct shipped ore. It's not even processed. Some of it's processed, but we saw this last cycle that in China you have a lot of conversion capacity. All through the pandemic, they continued to build conversion capacity, and China has the skills to process all sorts of lithium inputs. So, I mean, they've been developing this industry for a very long period of time. It doesn't just have to be, 6% spodumene concentrate. If you look, the grade has gone down. Typically, in the last down cycle, it had to be 5.7%, 5.8%. Now the average grade is like 5.3%. And that's the average grade. Mineral Resources average grade out of Mount Marion was like 3.7%. So even like 1%, lithium direct shipped ore from Africa, they know how to process and will process in China. But how much of that supply has come combined with the lepidolite over the summer? You also have the China brines, production volumes, are higher. You've also had supply from new suppliers in the spodumene market, Core Lithium, Sayona and Piedmont through North America Lithium, Sigma Lithium in Brazil. These are new units that have come into the market of spodumene, and you've had ramp ups, brownfield expansions from Greenbushes has had more supply, Mineral Resources through Wodgina has had more supply, Pilbara has ramped up production. So there's been a fair bit of supply. The demand has been growing. I forget exactly what the overall size of the market is, today, but whatever, 800,000, 900,000 tons. But the price has come down because spodumene is a commodity. Lithium, despite what others may say about specialty commodity focus, I mean, it's still it's highly prone to the whims of supply and demand. What I just said was there's a lot of cross currents here, and I don't really know the answer, but this is my synthesis of the current cross currents.
And do you think we found a level somewhere between $20,000 to $30,000 a ton?
I hope so. My partner Rodney is more the analyst than me. I say he's a CFA, buy side analyst. He's a real analyst. I just play one on YouTube. Is kind of like I joke. So he believes that like 20,000 is kind of like a floor, or it's very difficult for the high cost, the high end of the cost curve to make money at that price. That doesn't mean that you can't see lower than $20,000 prices for periods of time. That there are times when producers will operate at a loss, as we saw in the last down cycle. But the price should not go down to $5,000 or $6,000 as it did in the last down cycle, because the costs have gone up so much, right? We have had inflation, and so he thinks 20,000 is like, and 1,000 spodumene. A number of players won't make money at 1,000 spodumene, right? So he thinks it needs to be higher than that. His long-term assumption, I think, is about 2,000 spodumene and around 30,000. But at the current market environment, he thinks like 20 or so is a floor. You say, are we finding a level between 20 and 30? At 30, you'll make meaningful money, right? At 20, much less so. So that's a reasonable range. And right now we're like at 22, if I saw like the last fast markets number.
So that's a great overview of what's happening within the lithium sector. I want to also get your thoughts on graphite. I know you don't cover this, or this is not an area of expertise, but as you know, China recently imposed restrictions on graphite exports. It's a very critical component of EV batteries, and I wanted to get your thoughts on this, and what does this also mean for the lithium sector, if anything at all?
I'll answer the question on the lithium side. It doesn't necessarily mean anything today, but it is a warning, right? That if they did this for graphite, they could do it for lithium. And if you're reliant on lithium and there's not ex-China supply of lithium, you'd be in trouble, right? And so that's the only corollary for lithium. Graphite specifically, we looked at graphite for a number of years. Nouveau Monde, was a client of ours for a period of time. It's not now. Last year, we were trying to get our head around graphite. And a problem with graphite is, unlike lithium, there's no Albemarle and Livent and Allchem and SQM in the graphite sector. That is, publicly traded companies who educate the market every quarter about what's happening in the graphite market, right? It's completely like China dominated, right? You have Syra, one company that, is producing, but it's not, they're not a huge player. And the market for graphite is bigger than lithium, and and the EV component of it is much smaller, right? So the steel industry, so you have to analyze like so much, in the graphite market, but it is more dominated by China than anything. Another factor is there's the synthetic graphite versus natural graphite, and what's the preference, but China very specifically, this is a big pinch point, right? China does control all of this, and if they are, I don't exactly know what the restrictions are specifically, but it just sounds like it's another warning shot, just like they did with gallium and one other one in rare earth space. It's just a reminder to the world that, being overly reliant on China for any kind of critical material is not a good thing. And it's why America's Inflation Reduction Act and other policies are being implemented on a global basis to change that. But it's going to take a really long time. But the graphite plays like Nouveau Monde and others are touting this. See, finally, we got some good news, on graphite, because the graphite price has been going down also a ton this year because there's oversupply. Why is there oversupply in graphite? I don't know. So yeah, I don't know much more about graphite. Will we have, uranium? I know you've been focused on uranium. Finally is having a great year after many false starts. Is this a false start for graphite, or is this like, okay, graphite will be the next uranium, into 2024? I'm watching it, but it's very complicated industry to analyze, and it's not going to get easier. It's very opaque, and anyway, it's also a very difficult thing. We've seen this in the past. If the one lever is, China turning on or off a commodity, right? It's very hard to get excited about the commodity because they're turning it off, and then a year from now, 2 years from now, all of a sudden they turn it back on and they crush the price. Right. So I'd like to have a better, fundamental understanding of like supply demand on graphite and synthetic, natural, and it's very complicated. Benchmark Minerals does, I think, a very good job, as good a job as anyone can in deeply understanding, the graphite market. But I'm not convinced that this news is going to turn graphite into a hot uranium market, but it could. And I'll let the stocks kind of tell me what's going on.
Howard, I want to get your views on both strategic investments and also M&A within the lithium sector. And this has been an ongoing theme in 2023. Albemarle made a strategic investment in Patriot Metals. General Motors made a very large investment into Lithium Americas. And even with this pullback, do you think this theme is going to continue into 2024?
I do. I think it should accelerate. I think Albemarle is going to be looking for other things, right? Possibly in Australia, but possibly more in Canada, possibly in Brazil. I'll say, and you mentioned General Motors and you mentioned Stellantis, General Motors and Lithium Americas, that was for Thacker Pass, a clay project, Stellantis and Control Thermal. What we're noticing is that the incumbents, Albemarle, SQM, those who know the business the best are buying spodumene resources in Australia. Outsiders from the industry who have a big vested interest don't seem to be doing that. They're going for unconventional flow sheets. So they're taking on some added risk, in doing that. So that's just something I would say. I mean, Ford, in fairness, did have a $300 million debt facility into Liontown. So Ford has spread things around. They have some hard rock. They have some, I think they're looking for offtake from Compass Minerals and, in Utah. But Tesla has only done hard rock, right? And Tesla is building a hydroxide facility, to be fed by hard rock principally. So yes, I think we're going to see more M&A. I would love to see Tesla actually write a check, not just get offtake. But LG Chem, they wrote a check into Piedmont, for 200,000 tons of spodumene over 4 years. So I think you're going to see more battery companies, maybe SK, Samsung. Will we see Panasonic? I don't know. Toyota has written, Toyota Tsusho has done some. So absolutely, there's been so much news and deal flow. You're going to see it. But the current game is in Western Australia with iron ore billionaires. I've been talking about this. Life is good and life in the fast lane, LIFE, excuse me, taking a cue from the Eagles. So life in the fast lane, is Gina Reinhardt. I put out a tweet. I forget exactly the lyrics, but she has a nasty reputation, as a cruel dude. Said she was ruthless, said she was crude. So, here she is thwarting Albemarle, and she might be thwarting SQM. But overall, she's invested maybe $1.25 billion, $1.5 billion in on-market purchases to block these companies. But she generated, $5 billion just last quarter or in the first half, or some crazy number. Like, she's making so much money in iron ore through Roy Hill that it's a very interesting dynamic. It's a rough and tumble, entrepreneurial patriots, in Western Australia that kind of are saying, hey, foreigners, this is our turf, right? But you have her and Mineral Resources, Chris Ellison, who are kind of, carving out, the Western Australian spodumene dynamic, which is the most important dynamic in the lithium space. It's the Australia to China relationship, and is very strong. And there are new discoveries being made all the time. However bad the lithium price is going down, there's been a huge activity in exploration companies. Azure came out of nowhere, and if you were invested in Azure, you would have made 10, 20 times your money. So that side of the, like, even in this bear market, Rodney and I are very focused on early stage exploration, in particular in spodumene plays. And not just in Western Australia, but what has also become, you mentioned Patriot, the hottest area, one of the hottest areas in lithium is James Bay, Quebec, after Quebec being, the bastard child of the lithium industry with the prior failures of Nemaska and North American Lithium. But North American Lithium's restart, has put Quebec back on the map, and Patriot and Winsome, exploration success. I think you're going to see more of that. I think you're going to see more strategic interest come to Canada, with Quebec, at the top of the list. Maybe Ontario, maybe some other jurisdictions, provinces, and I think you're going to start seeing them come into Brazil as well, because there have been meaningful projects that have discovered resources, and in Sigma's case, there's in production.
You made a lot of interesting points there. I guess one of the things I want to ask you about is why SQM and also Albemarle, why not focus on South America? Why did they go to Australia, and why haven't they come to Canada yet? Well, they, Albemarle did make an investment in Patriot, but there's many other companies.
So South America, SQM is has a challenged relationship with their country, their government, and policy matters. And Boric, is changing policy in Chile. So I think what's interesting is that Lithium Power International, which is a former client of RK Equity, a very advanced permitted brine in Chile, right? Very high grade, very high quality, is basically being sold not to SQM, right, but to Codelco, the state, copper company, for like $300 million. So you're seeing SQM is paying for the equivalent. Like Azure as a company, is 40% owned by Mark Creasy. So like when you buy Azure, you're only getting 60% of the asset. I think, I forget exactly, their bid was like 1.4 or 1.5 billion, but for 100% of that project, it's effectively $2.5 billion or thereabouts. So they're spending that money on a company that doesn't even have a resource yet. It's going to be many, many, many years into the future, where they could have just bought Lithium Power in their Maricunga asset, like for $300 million. So why is SQM not buying that, right? Because there was only one bidder for Lithium Power, and that was Codelco, right? Because the government policy, so good assets go cheap if government policy is bad, and the government, doesn't like it. In my opinion, Chile's pain, is Australia's gain, and will also be Canada's gain. And I think Albemarle looks the same way. Albemarle has struggled to ramp up production. Also, brines are hard. Okay, brines are hard. They take a long time, right? Lithium Americas is just starting to be in production with Ganfeng, which is like 7 or 8 years after Orocobre, okay, or Allchem. And they started at the same time. So there's lots of projects in Argentina, but brines take a long time. Political risk in Argentina is high. And that's why I think you're seeing the incumbents who have existing customers that, hard rock is more scalable, it is sustainable, it's secure, I have these 6S's. It's just, Western Australia is a great jurisdiction. You can get permitted there. There's a skill set of people who can do things there. In Argentina, they're very remote areas, very high altitude. It's very, it could rain a lot one year and then it messes up. Brines are just, they're a challenge. They're low cost. Fundamentally, if you get it all right, they'll be low cost, but they're big headache. And so I think that's the reason, but if I saw something different, if I saw all of a sudden that they were buying into Argentina, then, maybe there would be a rush into Argentine assets again. Rio Tinto kind of came in. There, a number of players did go into, into Argentina, but I think China will be there, right? China is okay. They act, yes, they want to make profits, but security of supply matters, and I think China will be more comfortable with the evolving rules in Chile than a Western actor like Albemarle, and then SQM, just through Julio Ponce, et cetera, has a challenged relationship with the government, and they're negotiating, a long-term, update to their, I think their lease expires in 2030. And this investment in Azure, to me, is a tell that those negotiations aren't necessarily going too well.
And do you think it's just a matter of time before SQM gets involved in a Canadian asset?
Yes, I think it's just a matter of time. But we have some intelligence, from that they were looking seriously, this year, but weren't going to make an investment this year, right? But next year they might, right? Or the year after they might. But they were very astute. They found Azure early, and got 19.9%, quite early at a low price. So the average, to get the rest is, will be lower, but like the price that they're paying, this 2.5 billion or whatever the number is approximately, is orders of magnitude larger than what they paid to get into their Mount Holland asset, which they're partnered with Wesfarmers on. They basically invested $150 million to get 50% of that project. They have had to invest a lot more now, obviously, to build the mine and the hydroxide plant, but just the cost of entry to get control of the asset in 2017 was much cheaper than what they have to pay now. So the fact that they're paying as much as they're paying now, reflects their optimism on the long-term lithium fundamentals. So that's a good sign. It represents that negotiations aren't going so well in Chile, in my opinion. And it represents that they want to be in hard rock. They don't want to be in clay. They don't want to be in DLE brine. And they don't want to be in South America. If you remember, they came into Lithium Americas in Argentina and then they left, right? So they're not, the Chilean Argentines, they're not interested, right? But it will make sense for them, as the North American and European markets evolve. They're not going to want to just, they can't just process in China, right? Hard rock from Australia, right? And I don't know, maybe we'll see. They're building a hydroxide plant in, with Wesfarmers that's taking a really long time. I think they're struggling with it. SQM doesn't really have hard rock mining skills. They in a meaningful way. They've had to learn spodumene concentration skills, and that's hard in its own right. And then learning to process from the hard rock to hydroxide, in Western Australia, that Albemarle has struggled, with Kemerton. Tangshi has struggled with Kwinana. So, but they recognize the market's growing very fast, and they want rock. They want hard rock. So, so that would make sense that they would want to come to Quebec, in time. So I wouldn't be surprised if you start seeing SQM do what they did with Azure, maybe find a company and buy a 19.9% stake, that's focused in Canada. And I would bet it would be in Quebec first.
Because we're on the subject of M&A, I want to ask you about Exxon and Chevron. They recently made very large acquisitions, 50 billion plus, which is like the entire size of the whole lithium sector. But do you ever envision seeing an energy company investing or buying a lithium company?
Yes, and you've seen there were rumors or talks that Exxon had bought a private company, Galvanic, which is in the Arkansas region, DLE story, for like $100 million. E3 Lithium received a $5 million investment from Imperial Oil, which is a subsidiary of Exxon. So, and Koch is in the oil business, and they have invested in Standard Lithium, $100 million, and they invested in Compass, $250 million. So I think the oil and gas companies are more comfortable with liquid lithium, right? So these oil field brines. I think Exxon should buy Albemarle, right? Because in the past, Albemarle traded at a very high multiple, like 10, 12, 15 times EV to EBITDA, where the oil companies were trading at 5 or 6 times. So it would not be accretive on that multiple basis. But now the multiple of Albemarle has fallen so much that it probably would be accretive. and they're in the chemical business, the refining business. So it would make sense. But the fact that big oil is merging with itself shows two things. On the one hand, it shows they believe fossil fuels have a future, for a long time. On the other hand, it could be a reflection of like, well, it's going to be a declining industry overall, and we now need to be bigger, right? And rather than spend a ton of money on exploring for new finds, it's cheaper to buy existing. So it's I don't view it as necessarily a negative to the lithium space, but I'm not confident that we're going to see big oil into the space. I thought we'd be seeing more big mining into the space, and I think we will. I think Rio Tinto has made some, small investments in Quebec on an exploration side. I think they have a bit of buyer's remorse. They spent $825 million on Rincon in Argentina, and they're realizing that's, going to be a challenge. But why Rio Tinto hasn't played in, the Western Australian market, that's their backyard. I've thought for years that they could have. I think they were late, to some degree, but or they could have gotten really, like in the last downturn, they could have picked up assets for almost nothing. Now they're looking at the market and they're saying, oh, valuations are too expensive, they're too frothy, whatever. So they're watching and waiting. But I think valuation now is a great time for them to enter and try to pick up some assets, like high quality assets like Albemarle or Livent. Once that merger is done with Allchem at the end of this year, could be interesting to them. Simon Moores at Benchmark Minerals made a comment that, like, with the lithium prices down so much, there's like a 6 to 9 month window now where the OEMs, auto OEMs, battery OEMs who have been, reluctant because prices were so high, they should now pounce, while the price is low, and start cutting deals and writing checks to a number of these development companies. But with GM and like Tesla just doesn't seem to want to write checks. Everyone I'm speaking to is telling me they haven't gotten there, that they're going to write checks for upstream mining. And GM, yes, they wrote a check. Half of their check went to Lithium Americas, but on the other hand, now they're slowing down their EV investment. Is all of this kind of negativity that the UAW, strike has raised their operating costs, will raise their operating costs, and they're not making money on EVs. So are they going to rush to secure supply? It's hard to see. Like, I'd like to see GM finalize their investment with Lithium Americas, and I hope they do. And when and if they do, maybe others will follow. But big oil, I think, I don't know. We'll see.
Very interesting points, Howard. As we wrap up, we began this discussion talking about music, and I'm going to end it the same way. I see a verse from a very well-known song behind you, behind your left shoulder. What's the significance of that?
So Bob Marley, Three Little Birds, Don't Worry About a Thing, because every little thing is going to be all right, is actually my ringtone. And when I saw this, I don't remember exactly where I found it, but I figured I had to have it. And I'm in my kitchen, which I'm usually podcasting in my guest house, which has a different background, but I sometimes interview from here. But this is where I do all my Zoom calls. So whenever I'm having someone here, rather than have a fake background, it's just a subliminal message here, and it's a subliminal message to all your viewers who are invested in lithium that don't worry about a thing, because every little thing will be all right in due course. I hope it'll be in 2024, but if not, after that. The long-term thesis for lithium is still very much intact. Be selective, maybe speculate on some early stage juniors, because like I get comfort from SQM and Albemarle and Gina Reinhart and Chris Ellison writing big checks based on the long-term thesis.
Well, that was a great discussion, and that's a great way to wrap it up. And I want to thank you very much for providing your insights today and making time. Thank you.
Thanks very much for having me, Jimmy. A real pleasure.